Okay, this is Brian Stoll for Timing Strategies, Wednesday, November the 14th. What did we get today? Well, first off, I'd like to mention, sorry about yesterday. We had no post on the video. We had some matters that kept us from getting that out. But let's just get right down to business. Looking at the S&P, SPY for the proxy. We had that nice big up day yesterday. Nothing but a short squeeze there. Now, what do we anticipate? Our systems are actually long. Regrettably, and with all honesty and candor, we were long from this day right here, 60%. We got out, so we were long from Friday, 60%. We got out, went flat on Tuesday due to that break, and the market did exactly Tuesday what we were looking for on a Monday. Well, bond market closed and all that, so be that as it may, we are now back to a 60% long position without the benefit of that bump up from the Tuesday low. Nobody's perfect. We work with probabilities the best we can, but we are honest and we're not going to hide anything. This is also more for anybody. This is for our clients that are with our account, so they know they can check this on a daily basis, what's going on and what we're looking for and why. So again, we're 60% long in the spiders of the SPY, or the S&P Right Extended Day System, looking for a test back up into this area of our regression channel, and that comes right into that main threshold, which is the 30-day low or monthly low. Also, potentially right up into this level, right about, well, starting from the close, somewhere up in that level, about the 51.5 to 52.5, comes right in that 55-day area average, so anywhere between 150.5 to 152.5. If we get a test back up in there without any kind of a violation of any daily low, and because we are coming from very deeply oversold levels for 1, 2, 3, 4, 5 days down, on a percentage basis, we should see potentially higher highs without any kind of a daily violation low. And if we get that, again, this is the case A, B scenario. If we get a day where we violate this low, and then we head back up to this level, then we can go a lot higher. If we don't get a case where we violate that low, we open somewhere or trade no lower than yesterday's low, and we move higher than today's high, what we're going to look for on a daily sequential basis, if we get bars that start looking like this, is once we get back up into that level, and we can see 1 or 2 or 3 or however many days, up into that 150.5 up to the 152.5 level in that regression line where that green line is, and also where our moving averages are. At that point, we will at very least take that long position, that 60% long position, off. And depending on the systems and our signals, whether we go just flat or if we go short, that'll remain to be seen. Scenario B, if we take out this low and then we head up to that level, that gives it a little more potential breathing room, because people that got stopped out below yesterday's low, they're going to be thinking, I got to get back in because I missed it, and it's just a quick snap back, and that gives it the potential for a much higher move up into the end of the year. And again, we're getting close to the end of the year, shopping, Christmas, Thanksgiving, the plunge protection and the FOMC want to make sure that shopping is healthy and all that spending goes. Scenario C, what I like to also include here, is if we get a violation of the low and it takes us back down below Monday's low at this level, at the 143.5 level. At that point, depending on price action, we may go flat. We may, depending on the bar's daily range, we may have to add to the position. Again, we only have a 60% long position. The reason why, again, is risk management. So anything can happen here. The seasonality that we're looking at is positive, but there are some very big structural fundamental negatives going on, and it's technicals become very at the very best kind of a, how would I say, a windsock. They're not a compass, they're not a sextant, they're not a GPS, they're just kind of a windsock. Fundamentals are the underlying structure of any market, but the fundamentals are never known because, until it's too late and it's too obvious. So what we have to work with is the best we can as the technicals with an underlying fundamental theme or structure weighting. So that's our ABC scenario, depending on how the day's range trades over the next few days. What I want to bring into consideration also here is the XLF. It's a pretty busy looking chart, but that we actually bought for some clients on that day, which was Thursday, I believe it was, or Thursday or Friday of last week. And we've got 1, 2, 3, 4 days of higher highs, and this is what I'm potentially looking for with the spiders. We've got 1, 2, 3, 4 days of higher highs. Once we get a 5th day of higher highs without a violation low, what we're looking for is to sell that first rally on the first extremity. That's not what we're looking for. What we're looking for is to sell that anywhere up here. If we can get it up into that level on the XLF of 33, 33.5, we're going to take that XLF, we're going to sell it, we're going to buy the SKF, which is a negative 2 beta ETF, looking for a retest of that low. And with that in mind also, that brings into thought the BKX, which is really the most important sector of it all, because the XLF is an ETF that can actually be pushed either one way or the other. So that BKX, if we can get that back up to the 103 level, 102, anywhere above there, again, 1, 2, 3, 4 days of higher highs. If we get one more day of a higher high, that's going to be our trigger. That's what we want to look at very, very, very closely, and that will try to take our cues off of that, because again, so far this is a bear market rally on the financials. So, we take it day by day. Feel free to give us a call at 800-675-2131. This is Brian for timingstrategies.com, or you can give us an email. All right? And have a good evening. Best of luck to everybody tonight, and talk to you tomorrow.